Hello everyone, my name is Forrest. You're watching Bitcoin Not Crypto. In today's video, I'm going to talk a little bit more about MicroStrategy. The last episode that I did about MicroStrategy did really well. It's something that people are interested in right now. I'm going to talk about the pros and cons, the problems of MicroStrategy, what makes it so much different than Bitcoin, and really a completely different bet, although it might track Bitcoin's price with more volatility, more upside, more downside. Just first off, before we get into it too much, a little bit about my history. I'm not a financial advisor. I do own some MicroStrategy and I own some Bitcoin. MicroStrategy is a very interesting company right now. For those who don't know much about it, basically what they can do is they can issue convertible debt. That means that basically it's a debt offering, so people that are obligated to buy bonds could buy these, and anybody within the bond market could buy these. These aren't equity, this isn't a security, these aren't new stock, although within the convertible bond there is issuance of new stock. So if you buy this bond, this is just an example. They have all sorts of different bond offerings that they've done in the past to raise money. And the reason they do that is they raise money and then buy Bitcoin with the money that they've raised. So here's just kind of an example of what one of these might look like. Say the share price is 150. Part of the convertible bond is that you are buying within the bond an option to own shares at 180. So there's the need for the price of the underlying stock, which is MicroStrategy, to rise to that point for the convertible bond owner who buys this bond can then convert it into shares. With that as well, so that's like an option, right? That's almost like buying a call option. Within that as well is the bond part, the debt part, which is really low interest rate because of this convertibility and that being part of the selling feature of these bonds. So the debt is usually issued at sub 1%, and these are long dated issued bonds. So it's many years, most of them. Now, part of that is very interesting because what happens when these bonds become mature is people will convert them into shares, and that actually dilutes all of the other shareholders. Now, you really have to be kind of keeping track, because what happens really is there's these announcements that the CEO, Michael Saylor, will make, where he says, okay, we're going to issue more convertible debt. We're raising $800 million of convertible debt. Now, the share dilution doesn't happen then. It happens when these come due, basically, because the bondholders are holding on to the bond to get that interest rate the whole time. And then at the end, the convert happens, basically. So the share dilution, you have to actually look at when these debts come due. Now, the reason that these bonds can have such low interest rate is because of the volatility of the underlying security that is the convert. So the value of basically the call option of that part of the convertible bond is really valuable because the implied volatility of MicroStrategy is 110%. So the likelihood of them being in the money when it comes due is very high. So these bonds are worth a lot of money without the necessary, without increasing the debt or the percentage that they pay back every single month. This is much more complicated and much more complex than Bitcoin, because this is a Bitcoin acquisition company. They call themselves a Bitcoin development company. They've done some Bitcoin development in the way of creating a digital ID system for corporations. They've held a Bitcoin conference, kind of like a Bitcoin for corporations type conference. And they've announced that they're going to become a Bitcoin bank. Now, in recent interviews with CEO Michael Saylor, he has talked about how MicroStrategy is gearing up to become a Bitcoin bank. Now, what does this mean? Well, he's also talked about Bitcoin yield and yield on Bitcoin through lending to trusted financial institutes. So all of this If you're coming from a area of being a cypherpunk, of being, into Bitcoin because of the sovereignty of it, a libertarian mindset, and an anarchist mindset, which a lot of Bitcoiners are, this already sounds ridiculous. This sounds counterproductive. This sounds like Bitcoin getting co-opted. Now, I think what MicroStrategy is doing is they are playing fiat games with Bitcoin, which has its place. Other corporations, they're not interested in Bitcoin because of being able to hold it themselves. In fact, they're probably not going to be allowed to. They will have to hand that over to a trusted custodian, just like MicroStrategy is. They don't actually hold the Bitcoin that they have underneath or within their holdings. It is custodied by basically Coinbase at this point, but will be custodied by other entities as well, because that diversifies their risk. Because it's a risk to have your Bitcoin. It's a risk to custody it yourself, but it's also a risk to have anybody else custody it. And there's this kind of quote, which is not your keys, not your coins. So if somebody else has the keys, then it's basically theirs. Who actually owns the Bitcoin is a very good question. Even when you hold the keys itself, even when it's on a hardware device, it's not on a hardware device. The hardware device is a means to move that Bitcoin from one place in the time chain to another on the Bitcoin chain, basically. So who actually owns the Bitcoin is a good question, but you can get as close as you can to owning it basically by having it in cold storage, have your own keys, and have your own access to it. So by buying MicroStrategy, you might say, okay, well, one share equates to this amount of Bitcoin, and they have a Bitcoin yield because they're able to do this Bitcoin convertible debt strategy where they're actually increasing my Bitcoin the Bitcoin per share, and they're increasing my ownership of Bitcoin. This is like beyond a derivative, right? This is you're not even entrusting MicroStrategy. You're entrusting Coinbase. You're entrusting the bond market to continue buying these bonds, which they will within the foreseeable future, because they're the best basically bonds that you could ever buy. And there's a lot of institutions out there that are forced to buy bonds, and they want the highest performing ones. They don't want these bonds that return a negative real rate, basically, although some do. So if you think you're buying Bitcoin by buying MicroStrategy, you're not. You're buying a fiat instrument that holds Bitcoin underneath it, which is a layer within a layer within a layer. And just know that, right? Bitcoin serves additional purposes if you hold it yourself. And I believe that those purposes have a lot of value. Now, there may be a lot of value in holding MicroStrategy, and that's because it might appreciate more than Bitcoin does now. And it has, right? It's basically outperformed NVIDIA by a couple percent. It has just been neck and neck, kind of in and out of performing with NVIDIA. So it is an incredible performer in the way of, in priced in fiat dollars, which is our current unit account. So that's fair. So it's increasing its Bitcoin per share. It's increasing its fiat nominated value. And it's continuing to be able to do this while becoming a bit of a meme stock, while acquiring some short interest, while doing some squeezes. And it's kind of bucking the trend of only moving with Bitcoin because there's these additional layers of interest within there. Now they hold a lot of Bitcoin. So within that, you say, okay, this is, this stock outperformed NVIDIA. Why wouldn't another company just do the exact same strategy as MicroStrategy? Buy Bitcoin, use their public company abilities to issue convertible debt or something similar, and buy more Bitcoin with it, increase their Bitcoin per share. Well, there are other companies doing this, and they have varying degrees of success within them. Semler Scientific, DeFi, Metaplanet, and a few other handfuls of companies are doing this. And there's others that are planned to, like the recent SPAC merger of Fold, which has a Bitcoin reserve strategy. It's a Bitcoin-based company, and it plans to use the public issuance of its share, of going public, to be able to implement more strategies of acquiring Bitcoin. So there are companies wanting to do this. They're all smaller than MicroStrategy at this point. And you might think, okay, well, what if a bigger company does this? Part of the appeal of MicroStrategy is that it's the only one doing this. So it's kind of like the only player in the market right now. You know, it's the only option for you if you want this leveraged play within a stock market kind of holding of this leveraged Bitcoin, right? So if another company does this, one that's bigger than MicroStrategy could implement a lot more cash, right? Say they have a ton of cash on in their reserves. Well, there are lots of companies like that. You know, let's take the example of one of the biggest companies in the stock market and one of the least likely to do this, which is Berkshire Hathaway. Now, they have a certain clientele that hold their stocks. And to put it bluntly, they're basically boomers. Of course, there's going to be a lot of others, but boomers hold their stock because they trust Warren Buffett. He's been the kind of best investor, compounded annually for his lifetime in this market. He has a value-driven strategy where he buys undervalued companies. The holdings they have are these high quality companies that pay dividends. They use these dividends to buy more. They miss out on all sorts of different tech trends because basically their biggest holding at this time is a tech company, but it's Apple. And Apple is this kind of slow moving tech company that is like very close, very, 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 very mature company, right? So they buy these mature companies and then they buy these undervalued, less mature companies. That's their strategy. And they hold a ton of cash in short-term T-bills or short-term bonds. And they have a huge amount of their portfolio in cash. This is a big talking point. You know, like whenever they sell some stock and increase their cash, they think, okay, well, Buffett knows something the rest of the world doesn't, and this means a recession is coming, or this means that stocks are going to become undervalued, so Buffett can implement all this cash. But that might take years, right? It might take years to materialize. And in the meantime, they're holding these huge cash reserves, and cash in short-term T-bills, short-term bonds, cash itself is probably the worst thing you could ever hold. You're getting a real negative rate of return on these bonds because inflation is higher. So monetary inflation, the debasement of currency, the additional supply of new money is more than the value creation of the percent that you're earning from yield from holding debt with this cash. So it's the worst trade you could ever do, is hold bonds. And that's what they're doing. So if they took that instead and they did the best trade they could do, in my opinion, which is buying a limited supply, fixed issuance, unstoppable payment system, which accrues value as global money goes up, which is just going to be inevitable as the money printers around the world start whirring and continue to whir, and there is no sight of less debt. There's only sight of more debt. This is the best asset they could buy, right? There's less counterparty risk than any other thing they could ever buy. It's like a commodity in a way, but it is unlike the commodity in the way where if more producers came on, as in more Bitcoin miners came on board, the difficulty adjustment accounts for that, and the supply does not increase when more development or more miners come on board. Whereas if you bought oil, right, that's another commodity, or if you bought gold or silver or any of these things that are commodities, you are opening yourself up to the counterparty risk of the value of that getting high enough to a level where more businesses decide to go in there, or the same businesses that are already within there decide to expand and extract more of that commodity or create more of that commodity. So basically, Bitcoin is the best bet for a company like Berkshire Hathaway. Now, if you look at their cash reserves and you look at the current price of Bitcoin, it would be possible that they would be able to buy more. I don't know exactly the amount, but it is possible, right? In a sense of them being able to buy more than what MicroStrategy has, or equivalent, or around the same, or something like that. I don't know the exact cash reserves that Berkshire Hathaway has in this example, but the problem is if they start buying it, there's going to be an increase in demand, which increases the market cap of Bitcoin, right? Market cap is this very interesting thing that is extremely dynamic and really dictated by the market, right? It's the market cap, but it's dictated by supply and demand. And the supply does not increase, as we've already said. It's only increasing by 450 new Bitcoin every single day, which is going to happen until the next halving, and then it's going to be 225. So it's going to even get less and less. But if there was an increase in demand, right, Berkshire Hathaway would have to be extremely smart about the way that they would be buying. They would have to, one, not announce that they're buying, because that would create a huge shockwave within the news cycle for markets and for companies and institutions. And they would say, whoa, Berkshire Hathaway is buying Bitcoin? Okay, we need to buy Bitcoin too, which would immediately jack up, because of demand, it would immediately jack up the price, which increased the market cap, which would decrease the amount that Berkshire Hathaway would be able to buy. So this is a kind of an interesting dynamic here. And because it's a public company, they do have to basically talk about what they're doing with the money. So it would come out maybe a quarter late, but how much could they buy in that meantime without alerting basically the masses, the media frenzy? And then when they did, the price would go up even more, right? As I just stated. So their ability to buy Bitcoin at this price would be extremely limited. And just the amount of money that they would put in if they bought their entire cash reserve into Bitcoin would jack up the market cap so much, making it entirely impossible, probably, well, extremely unlikely that they would be able to match the reserves of Bitcoin that Michael Saylor has with MicroStrategy. Now, as that happens, of course, MicroStrategy, they continue to buy, they do whatever, but they continue to also hold. They have that 200,000 plus Bitcoin in reserves at over 1%. And as this other company in this instant, Berkshire Hathaway, the least likely, as they buy and jack up the price, the value of the underlying asset that MicroStrategy has already accumulated increases. The volatility increases, their ability to issue debt on this underlying asset increases. They're able to increase the amount they have, even though the price has gone up, they're still able to buy some. And the value of MicroStrategy goes parabolic in the realization by the market of saying, hey, here's a company that already has this. We can see the prices going up. We can actually kind of estimate to some degree how much Berkshire Hathaway is going to be able to buy, and it is not as much as people think. And the value of MicroStrategy is already here. Let's front run the continuation of Berkshire Hathaway buying and all these other institutions jumping on board as Berkshire and following Berkshire Hathaway. It's kind of a runaway train. It's kind of a crazy scenario, and it is possible. It is possible. And that would be a big pro, right? If something like that happened. And I don't see why something like that wouldn't happen, because Bitcoin is obviously the winner within crypto. It is the most liquid. It has the most smart, big money in it. And all the other projects are vaporware, scams, or basically test nets for what Bitcoin could implement in the future on some layer 2. So Bitcoin is the clear winner. That's why my podcast is called Bitcoin, Not Crypto. MicroStrategy has sufficiently front-run Bitcoin to a position where they hold a huge amount. And it is an interesting company for the potential price appreciation that they still have. Now, the Bitcoin bank idea is also interesting. Maybe they'll be able to use that as part of their actual business operation and increase the amount of money that they make, whether it's in Bitcoin or fiat, and they can convert that to Bitcoin. They also have an underlying company that is interesting as well. You know, it's data analytics for corporations, and it's like a digital strategy company, basically, that is profitable. It's a profitable business. It continues to be, and they run those profits back into Bitcoin, into sound money. They have positioned themselves in an incredibly smart way, and they are front-running the idea of institutional adoption, of being a Bitcoin bank, and of generating yield. They're front running all these different ideas, and implementing these things. All of these are risks. When you're dealing with investments, you're dealing with risks. Maybe the Bitcoin bank doesn't pay off. Maybe their data analytics company starts to lose money. Then what do? Do they issue debt to pay their failing business? Right? When you're buying these things, there are a lot of risks. When you're investing, there's a lot of risks. The risks with Bitcoin are pretty low, right? There's a governmental risk of continued regulation, but it's clear that this thing can't be stopped. If they could have, they would have. And yeah, maybe they can regulate the on-ramps and off-ramps, but there's a lot of smart people creating ways, workarounds. Maybe they can regulate the public ledgerness of Bitcoin, but there's a lot of privacy within layer 2s. There are a lot of smart people concerned about these things. And, you know, there's these tiny little risks that just seem completely inconsequential and so unlikely. You know, it's like when we start going down the risks to Bitcoin, we start thinking, okay, what about quantum computing? Well, that is just a ridiculous risk, right? Like that is, you know, actually Michael Saylor addressed this in his recent interview that it was quite controversial, but basically that is the risk of better computing, which is always a risk, right? It's baked into the risk profile, and the difficulty adjustment can compensate for that. And small adjustments to the code of Bitcoin could make it basically quantum computing resistant. So these aren't really risks. This is just fear that drives people into buying altcoins, which I think is an interesting perspective and one that I agree with. And that is something that Michael Saylor said. One other thing he said that was quite interesting in this latest interview that was quite controversial was that he claimed that basically self-custody is a way of these hardware wallet manufacturers selling their hardware wallets, and that it's mostly, or well, he said basically it's for paranoid anarchist cypherpunks, I believe is the wording. And in the past, he's talked about how you can become a sovereign individual by just writing down 12 words or memorizing 12 words, and basically the government couldn't take something from you because they can't get into it because it is cryptographically protected and unhackable. So in these ways, he's kind of talked about, basically two sides of the spectrum, right? Like he's encouraging custodialship with trusted financial institutes and trusting the government in this latest interview, and building a Bitcoin bank which would hold custody of other Bitcoin, I'm assuming, for other people to earn some sort of yield from. So he's kind of talking on both points throughout his career. And the reason I'm talking about this is because this is another risk of owning MicroStrategy, is that you have to trust somebody. You have to be okay with what Michael Saylor says, what he does, and where he moves the direction of MicroStrategy. Now, he's been great as far as the price appreciation of MicroStrategy goes, but this is just another form of counterparty risk that you don't actually face with Bitcoin. You don't have to worry about what Satoshi does. I mean, a lot of people do, but this is just another kind of reason to buy an altcoin instead, with some live founder who is actively dumping on you, as opposed to a likely dead founder or a founder without the keys who is not dumping on you. There is no proof, no evidence that Satoshi has ever dumped his coins on anybody. And yet this is a huge fear for people to own Bitcoin, which is silliness in my mind. All right. So that is one thing. And the other thing too is he is moving in the direction, he's in the fiat world. He owns a public company. He's a Bitcoiner. The things that he has said makes me understand that he understands Bitcoin, and it makes me know that he understands Bitcoin. He is for self-sovereignty and for self-custodial for certain individuals. That's the right, and that's the thing, right? Is for certain individuals, and I would say everybody should have some self-custodied Bitcoin, but some people should only have that, right? Because that's right for them. Some people should have a mix. Some people should figure out what is right for them, basically. The risk of that should be known, right? And unfortunately, there will be people risking it more than they should. And that is like in the case of leaving your coins on the exchange FTX, which was just so sketchy. I mean, why would you ever do that? If you hold your coins on any exchange at this point, you shouldn't. You should definitely move to self-custody. Now, holding your Bitcoin in an ETF or in some sort of registered account, there are benefits to that maybe. There's benefits of being able to lend against it or borrow against it. I mean, these things are trade-offs. These things should be thought about, and maybe they're right for you, maybe they're not. But I think what he is trying to appeal to at this current stage in his business career with MicroStrategy is he's trying to appeal to the people that don't want to hold their own coins. And those people have a lot of fiat. Now, the people that hold their own coins, they might have a lot of Bitcoin, but the people that don't hold their own coins might have a lot of fiat. These are big institutional players. These are private companies, public companies, and wealthy individuals, basically, that want in on this action. And they are okay. Just as they are okay having their money in JP Morgan Chase and Wells Fargo and BMO, TD, Toronto Dominion Bank just got fined $3 billion for money laundering. You're holding your money with criminals, and a lot of people are okay with that. They're totally fine allowing these criminals to create a fractional reserve lending bank where if you actually all tried to withdraw your money at once, that money would not exist and there would be a giant bank run. People are okay with that for some reason. I don't know why, but people are. And for those people, they're okay with owning Bitcoin that they don't actually own. So that's who MicroStrategy at this point in their business is trying to appeal to. Now, do you want to be an owner, part owner, own some shares within this public company of a company that is moving in that direction? This is a question that you should ask yourself. Maybe you are, maybe you aren't, maybe it's a good idea, maybe it's not. Only the future will tell. there is no predicting really what the future tells, right? And this is what we all try to do by investing in the stock market, and many people fail. So it is hard to know what the future will be for MicroStrategy, but this has been some kind of pros and cons. And if you come out of this podcast thinking that MicroStrategy isn't right for you, and that the compelling points that I talked about self-custody of Bitcoin is important to you, then I implore you to look into the sponsor of this video, which is linked in the description. And it is called the Bitcoin Well, and it is a non-custodial exchange platform. So you can buy Bitcoin on there directly, and they send it to your wallet address. They never actually hold your Bitcoin for you, which is amazing. The other big thing that they have is they have non-KYC options, both online and at ATMs, with some of the lowest spreads I've ever seen for ATMs, using their cash voucher system. So if any of this is interesting to you, I recommend checking out that link. It goes to support this show a little bit at no extra cost to you. You can sign up using my referral, and it's where I personally buy all my Bitcoin. So that being said, this has been another MicroStrategy video, so hopefully it does well in the algorithm, and I hope to see you all on the next one. Thanks everyone for watching and listening.